Oh my God, dude. Wow. What the? And the euro's dumping. Bitcoin just pumped to 19,891. All right, screw this intro, dude. Are you kidding me? Real. And dude, at the same time of Bitcoin doing that just there, look what the euro's just done. The euro dumping at its lowest level in 20 years just now. Hold on, let me turn this down. What the? DXY, fresh 20-year highs. Are you kidding me? All right, let's go to DXY. Will someone shut up that cop outside? My God, look at this. US 20-year yields just hit the highest level since 2007, I believe. Oh my God. I'm about to go outside and destroy this cop, whoever this is. Do you hear the sirens going on? As all this is happening, sirens are going off like this outside my place. All right, NASDAQ dump. Oh, dude. Oh, my God. Bitcoin just went from 19,950 all the way down to 18,669. We are talking about what just happened on Bitcoin. It just lost 6.45% of its value in seconds. We're talking like 60 seconds or less. Gold is dumping now. Gold getting destroyed. Oh, my God. I'm just kind of happy I went live. This is insane. This is absolute pandemonium. Chat, do you see what gold's done? Gold is regarded 1677, 1682. Really not even 1682. 4 days now, and you just tested it again, and gold just went from its high to its low. Oh my God. Okay, so what is Bitcoin doing? Bitcoin actually went from like 19.5. So it went up 2.5%, then went down 6.5%, and from being down 6.5% is now up 3.7% in a matter of a couple minutes. The volatility is being unleashed right now. We knew this was going to happen, right? We knew there was going to be something, but this is crazy. I think this is crazier than last time. This has to be. Uji, shut up and leave. Go somewhere else, man. My God. Crybaby. Why don't you cry about it, man? Talk to your therapist, okay? Tell them about it in your session, all right?
A calamity ensue.
What's up, dude? All right. What's up? 75 basis points. I don't know. All I'm seeing on my screen are just, it's like random government stuff, right? I don't know. It's just, oh God, just a bunch of government workers on TV. That's what I see on my FOMC. Okay. Whew. So gold, chat, gold. Remember, you cannot be bullish on gold. Gold is destroyed. It's like the only thing that happens next is 1522 based on historical price action. That's it. Unless we get a fake out. Clearly the fake out isn't there. I mean, I was about to go to bed last night to try to get ready for all this stuff maybe today. And wow, Putin spoke. Gold started rallying. The euro was dumping hard. The DXY was pumping again. The US 10-year yields hitting fresh 20-year highs. 4.14% up 2.73%. These are trading like equities. Look at this. Wait, hold on. This one, is this the all-time high one? Yeah. This is the US 1 year. US 1 year government bond yields hitting fresh highs, pumping like the Jesus. Okay, so you got the US 1 year, you got the US 2 year that has been pumping too. Look at this. 4.10%. Last time we saw that, September of 2007. US 3 year yields. 4.07%. Last time we saw that, October of 2007. US 10-year yields. Obviously highest level you've seen since 2011. US 20-year yields. Highest levels we've seen, I guess, ever on this chart. I don't know. Yeah, on this chart, yeah. So there it is, man. Yields going berserk, right? Let's check in on the index funds. Oh my God, dude. The S&P 500, alerts going off, chat. Getting wrecked. Well, remember, leading up to it, leading up to him speaking, the market's always dumped. But in 25 minutes from now, they've always pumped. NASDAQ futures getting wrecked. Okay, getting wrecked right now, leading up to the event. Remember, he's speaking in what, 25 minutes? Every time. The other times we've oh my God, this many alerts, dude. All right, so we've had 4 increases, okay? 4 announcement of the increase of the interest rates this year. Every single time, 30 minutes leading up to the event, you've dumped just like this. And at 2:30, when he speaks, while he speaks or after he speaks, a rally ensues, right? So we could definitely be seeing history repeating itself again because everything's going to plan right now. Volatility, insanity. And it's really not going very far. It's not really going anywhere. There's not much follow through. It's just, it's dumping, man. We're at the lows of the day. But it was doing the same thing the past 4 times. The interest rates got raised. So can't be that surprised. The volatility, this is what we're looking at, man. All right. The VIX up 11.16% right now, session highs. What the? Oh, okay. It's like it's like Squid Game coin. Oh my God, it's 0. No, it was just, you just saw it go from 30 to 27.79 in a second of looking at that. What the? And Bitcoin's back down $18,888. Remember, it just now, again, bearishly back tested 18,891, and that's it so far. It looked like we were going to be kings, man. I hope you didn't FOMO into that. Oh, God. Yes, gold falling. It's all falling. I'm doing best I can to try to, like, keep it going right around these markets. Let's look at the Dow Jones real quick. Again, we're hopping around, all right? You know, at its lowest price since July 14th. That's clear. Down 0.71%. Dumping leading into the speech, to the announcement. And do the 4 screens. I have them. Yeah. Hey, man, hold on. Let me see if I can just put this over there. Okay, and I'm going to try to bring this down so we can get it right here. Okay, here's your 4 screens. Your 4 screens, all right? Your quad screen, battle station. I have this normally on my 55-inch TV. I just brought it down for you so you can kind of see. Use S&P in the top left, Dow Jones. These are all futures, top right. Bottom left is, Russell 2000 or NASDAQ. NASDAQ futures, in the bottom right's gold, spot price on gold. So, if you just wanted to get a clear view, would y'all prefer other, these are on the daily too. Would y'all prefer another asset on the quad screen? Let me know. Give me some thoughts. Not TOHOTs, but some just normal thoughts. Okay. All right, 4 hour daily. Let's go to the 4 hour on this one too. So, you know, I think it's a known we want the gold. Y'all want the DXY on one of these? Let's go DXY bottom left, maybe. Maybe? I mean, we could... I'm having Bitcoin on the normal screen, right? Like, this is Bitcoin. Like, I can just have Bitcoin up on the big screen. We can alternate easily between the two. Which treasury yields, though, you know? Look at that back test, man, and nothing else yet. But again, if history repeats itself, pump's coming. You just don't know. I mean, 4 times this year, the dump and then the pump into close, but then the next day, right? Here's the problem. Then the next day, collapse, like dump every time. Rice futures, bro, dude, come on, man. I cover rice futures almost daily. I can't get people interested in rice futures. No one cares, right? So I appreciate the Rice Futures suggestion, but it's just not sexy enough, man. I don't know, dude. It's like it trades like Bitcoin now, but old Bitcoin, bull market Bitcoin, you know. Okay, orange juice. Okay, so that's the thing. Last night, I'm just gonna keep it up here. I guess I can have Bitcoin. Yeah, it's redundant having all three index funds, right? They all look at them the same, right? So I guess I'll just have Bitcoin and one. Okay. Bitcoin, gold, S&P, and then I guess we can do. Should we do the DXY? Or should we, you know, because I've never been live for one of these. Just figured, hey man, I'm up and I've got a minute and why want to put Ethereum, dude? Who cares about Ethereum right now? Ethereum had its, we had a devoted, 8-hour live stream for Ethereum. Get wrecked, dude. Centralized crap now, okay? Government owns it. Ethereum.gov. Welcome. All right, here's your DXY on the top right. Okay, S&P top left, DXY top right, Bitcoin bottom left, gold spot bottom right, okay? That's a good little check on things. Okay, but yeah, orange juice was pumping last night with oil. My God, dude, last night oil was killing it. And then it's already lower than it was. This is crazy. Let me show you. And there was, of course, a shark. There is a shark. And the shark is not performing well, right? It got as high as 86.70. And since then, since Putin finished his speech, it's gotten as low. It's dropped 4.7%. Volatility is here. The summer is over. Okay, summertime sadness of just dead markets. Looks like we got something, man, to celebrate a little bit, all right? But my God, that Bitcoin pump and dump right there was it berserk, man. That was crazy. Okay, thanks for tuning in. I don't know. I'm sure there are a couple of y'all here, few of y'all. But yeah, again, why not do this? I got my Enron shirt on today again. All right, Enron, baby. Ask why. Always ask why, including if you should own Enron. That was the question they didn't ask. And that was the $1 million question, or multi-billion-dollar question in the end. But yeah, you're talking about volatility and the dump into the pump. Remember, this has happened every single time this year, 4 times, going on 5. You dump and then you pump after the speech, and that's it. Okay, so all is going according to plan. If history repeats itself, we will pump after. People will get trapped. I don't know what they're doing. Like, how you trading this, dude? What are you doing? I saw a tweet yesterday, speaking of like things like Enron, I saw a tweet yesterday about, it went back to 2011. Blockbuster was on its death throes, right? And they posted a tweet saying, what is it? The tweet was them asking, what is making you leave Netflix? Like the dumbest thing ever. Like, and then they're like, the best answers will get a year subscription to Blockbuster. Yeah. We'll show the Fed stream. I've got it up right now, but I mean, you're just looking at a live thing that says, a screen that says watch live at 2:30 p.m. Eastern time. So yeah, once the Emperor of the Debt Star goes live, we'll tune in, we'll listen, we'll pull a Wings Redemption.
Look here. Look, listen.
This is a new print, man. I don't think, someone find me an old 1990s Enron shirt I could buy, dude. Yeah, dang, I didn't even think about it. Should I get the vintage actual shirt that was produced and printed? The ink was printed before they went bankrupt. Now that's a thought, man. Very good thought. Okay, so U.S. oil get wrecked. Looks like things are going to continue down probably on it because, you had the volatility of the event and you just turned into a lower high, and that's the trend is lower highs, lower lows on U.S. oil. So it'll probably continue on. I mean, like staying below $87 long enough, U.S. oil will see $78 in time. Again, we could just go back to, gold real quick. That, I mean, my God, last night Putin opens his mouth and this thing goes up 1%. I know, dude. It's like 1%. Who cares? But remember, a $10 trillion asset class, right? That's almost like 8 apples combined. Okay, so it takes a lot. Like 1% on gold is big deal. But you can clearly see it just moments ago hit its lowest level since April of 2020. All right, fresh lows of the downtrend we are in. Good Lord. Bullish on natural light. Yikes. Bro, check out the Suka chart, man. All right, volatility is continuing. As you can see, gold's moving all over the place. More than anything. More than Bitcoin now, right? Gold's catching the craziness. Kozo the Blown. You should buy it, man. Buy it for me. I don't know. Maybe I'll try to get in there. Try to get into the Enron pre-bankruptcy shirt. $15, man. I think that's cheaper than man, God, man, this probably cost me like $25. All right, gold's bullish, man, I guess, right? No, only bearish on gold. Like, I don't care what it does. If it's below 1682, only bearish. You cannot be bullish on gold. You can't be, no matter what. If you care about traditional technical analysis and inflection points, you can't be. Because the historical price action below this level is only $1,522. Only. Nothing else. We have evidence to show that looking left. You can look at it too, man. This isn't like, hey, man, this is vaulted away information that only I have access to. We all have access to it. Oh my goodness, the S&P. Woo! Chat, we gotta sell off the S&P. But again, that is according to plan, leading up to Jerome Powell. If history repeats itself, we will rally after his speech, and the DXY will sell off. Okay. Take a look at the. I think I have alerts set up on these. Yeah. So look at this. You got the 10-year yields pulling back massively. I mean, massively. Like, it was just at 3.639%. And now it's at 3.573%. Clearly the volatility extends to treasury yields. Well, wheat was another one, right? We looked at U.S. oil that was pumping, orange juice, and I don't know why orange juice was doing anything. I mean, no way. Like, why would orange juice do anything last time? But wheat was another one that was doing some crazy stuff. Let me show you here. Yeah, like wheat was on the cusp of a massive breakout. Attempt and pulled back. But look how strong it is still. You have a bullish engulfing candle yesterday and you got some fall through today. Now, you can't see it really on your screen because the horizontal line resistance kind of covers it, but the 200-day simple moving average is right there at 923. So you got to wonder, will we break that? I mean, the thing is still in an uptrend, and it was this close to putting that uptrend in jeopardy right here. Because, how do you start reversing a trend? You make lower highs, then you make lower lows than the previous lows. Well, this ended up making about the same low. So if it makes the same low, it doesn't count. It's not a trend reversal yet. So you made the same low and began to rally. And what I think will probably happen is it'll rally and most likely make a lower high than 1284 or 1350 and then roll over again. But for now, it's, dang, man, what a freaking trend, man, right? Seafood futures continue to get destroyed. Seafood. This is your seafood chart. The Craig seafoods chart. Okay, see you at $100. You're on the way, man. Straight up, straight down situation. You see 886 soon. It's almost like there's a shark here. You'll react at. And here, I'll keep up the quad screen. Yeah, 886 is at that $100 level, so I don't know why you're not going to see an 886 here. Seafood. Okay, just going around the world a little bit. Let's see what's kind of happening with some stonks. Of course, you know, you've got the VIX up massively. So the VIX, I guess, pumped back up, right? Because, yeah, the VIX right now is at its highest point. It was down, man. It was up. It was, you know, in seconds. But look at it now. Here's your daily. And the thing about the daily is you got to be concerned, man. You were showing accumulation on volatility. The last time we showed accumulation on volatility, 2018 some, but really the global financial crisis, it was very similar in ways. So I would just don't sleep on this, okay? Highest levels on volatility you've seen since June 29th, about to be June 22nd. But again, you're just breaking a level like that 26. My God, you're even back testing it as support above the 200-day moving average. Yeah, man, I'd be So Father Lion, you know, thanks for watching, dude. I don't know, dude. I never do this ever. This is the first time of the year. All right, we've had 4 rate hikes. This is about to be the 5th. And this is the first stream I've done during it, or at least leading up to it. And my God, if it didn't, I mean, I don't really care. Like, the only thing I care about is like maybe a little price. I got that the moment I went live, right? The alerts were going off. I couldn't even finish the intro to the stream. It was getting so insane. So I didn't see it coming really, but dang, man. Forgot that it was like there, you know, the volatility increases leading up to it. We got 8 minutes till this dude speaks.
Bro,
Jerome Powell.
long time since I watched the show, but always get laugh and knowledge from the show. Got some cash ready in case they don't.
What's up, Black Horse? Thank you for the 5 super chat. Yeah, man, you should always have cash in these market conditions. You should have had cash for a year, okay? Because it's been terrible all year. But there you go. See the VIX, what it's doing, man? It's, well, we already know now, like, right? People are manipulating the crap out of this thing, right? People got caught doing it. A lot of positive news on Bitcoin. Dude, Bitcoin is just another asset. I mean, if we're talking about technicals, it is just another asset. Its performance is just another risk-on asset. That's what its performance has been. But hey, fundamentally, yeah, man, it's one of the only things that makes sense in this stupid, messed up world. I agree with that. And so, you know, everything's gonna, whoo, we're taking a breath. We got a few minutes, because I'm telling you, we could be doing the same thing. It's the same formula all year. I don't know if I'd call that a pump, dude. The TLT, this is the treasury bonds, not the yields, that have been getting murked. I wouldn't call that 20-year treasury bonds. I wouldn't call this pumping, dude. Yeah, 0.83% up. If you scale out a little bit, I can't even see it, man. Can't even see it. Only destroyed. I look at the futures though on this one. The UB1. And of course, it's below all these key levels. Bad, man. Right? Just blew through. I mean, look, the high from 2010, the low from 11 and 12, the low from 2018. I mean, you're lower than that, and you fell below it, you know, June 17th too. But if you're talking about formal supports, there's nothing really till 136.23. But yeah, it's up. It's up today, of course, because the volatility, what you think is going to happen, the inverse happens, or both happen, right? Or pump and dump, right? Like you can go back and you can clearly see. Do you see how easily the market moves? It's so illiquid, man. Like even on gold, like how fast things change. And I'm telling you, it could be up like it could be above 1680 in the next hour. Okay, I'm just saying. I mean, S&P could be up 3872. All this could be green by the end of it, because history tells us that's what happens. But it doesn't mean it's certain at all. I mean, hey, this is the time it changes, man. Yeah, Putin did kind of, you know, he's mobilizing troops. They'll be mobilized on the 21st. Wait, that's today. Yeah, that's today. And they're going to annex parts of Ukraine, and they threatened, you know, NATO in the West with nukes if there's interference with their annexation of Ukraine. So
Just wanted to say hey. I usually watch the replays because of work. Glad to catch this live. Crazy market. Glad I've been sitting in cash since December.
what's up, B-Slice? Man, it's been a minute. Thanks for the golden mean ratio contribution. Thank you, dude. That Fibonacci in the jar. Thank you, dude. Good to see you. Hope you and the wife and kids are doing well. All right, as you can see, right, it's very easy to move the market, and it's what's happening now is not going to be the case in the next hour. Things are going to be completely different. But then tomorrow, it's going to be completely different than what we're going to see in the next hour. Yeah, trading this is legitimately being at a casino and pulling a slot machine, man. Go in, just putting, you know, chips on your lucky number at roulette. I mean, that is legit what you're doing if you're trying to trade this stuff right now. Just so you know, if you understand that, you're like, yeah, I'm okay with gambling. It's like, dude, you might as well just go to Vegas. Dude, we're going to Vegas next week for the big meetup. Okay, like 60, 70 of us are going to be there. You're invited if you want. But I mean, you get free drinks. You know, you get probably a pretty waitress to bring you that drink. You get the environment, you know, the oxygen pumped in the room. You get to be with friends and stuff. It's way more fun gambling that way than, you know, I'm sitting at a computer screen and I'm just going to gamble. What happens when you win? Okay, maybe this time, based on your luck, you made some money. But what are you going to do? You're going to go to a steakhouse by yourself after this? I mean, you know. Yeah, everyone thinks 75 basis points, but 100 basis points is not ruled out at all. Wells Fargo thinks they should just go a 125 basis point
Hey Mitchie,
increase.
It's a good thing we have Pulse Dogecoin to save us in these trying times. Thanks for always doing what you do. Cheers.
Yeah, dude. Thank God for Pulse Doge Malone Chain Coin. Thank you, dude. Thank God. If it wasn't for Pulse Doge Malone coin, then yeah, I don't know where I'd be in life, dude. If it wasn't for that. You're right. Thanks, dude. Mother of God.
President of Preston is shame.
Come on, Mitch. They don't pump oxygen in casinos. Is that an old wives' tale? Someone in Vegas know that? Is that a wives' tale? Oh man, yeah. People in the chat are they're so on edge. They need to see the Pulse Doge Chain coin that it's rallying, man. It's up 7.85%. We're gonna do it. We're gonna move, man. Okay, there's just... Did it hit the 886 eventually? It did. Oh my God. Hey, at least Pulse Doge Chain coin hits a 1618 and reverses. At least Pulse Doge Chain coin, whatever, hits an 886 and reacts. That's cool, at least. You did it, man. You hit an 886 from the low to high. I'm not saying that's ushering in a reversal. I'm just saying it's kind of interesting, right? How Fibonacci is being respected on this thing. This thing. Okay. Go to Apple. How's Apple been faring with this? Well, Apple, ooh, yikes. Don't end like this. Well, it probably won't. It's not gonna end like this. What we know from history. Okay, all right, we got a podium. We got some activity over here. All right. And once he starts speaking, I'm gonna turn off the music. Oh, there he is. Okay. All right, chat. Muting mic.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employee employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers.
Look at gold,
Labor
see?
participation
Told you.
showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency.
S&P going green. You know it is. It's coming.
The
History.
round of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Nice one, Jerome. Nice one. History repeating itself. It's so
Hi, Chairman. Thank
crazy.
you for taking our questions. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my
Here we go. It's going green, man.
At some point, as the stance of policy tightens
Stock market,
further,
of course.
it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Rachel. Hi, Chair Powell. Rachel Siegel from The Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes.
Bottom right's gold, spot price.
In addition,
Big one's
in this
pumping.
cycle, longer-run
Gold's
inflation
pumping, highs of the day.
have generally been fairly well.
Stocks, highs of the day. Typical, same thing, fifth time now.
Complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that. It's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, or rather increase in unemployment and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also, do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Just to follow up on one small thing, are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick.
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting, and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see, at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side?
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now and not something I expect to be considering in the near term. It's just, it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment and price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always take all of that, try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, you know, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, you know, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy.
Dude, fix this guy's mic.
Your colleague said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong, but there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. You know, this is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to to a significant downturn. But of course we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the
Power
thing
hour has
most
begun, by the
painful
way.
for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward-looking and the lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability, and you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control. And that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year, expansions. And you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises, and so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, you know, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market. As you know, where you know, it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this
Doc's red again, man.
CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
You know, I think that shelter inflation is going to remain high for some time. You know, we're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think you know, hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question.
Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, you know, when we get to, let's assume we do get to that level, which I think is likely, you know, what you're going to do is you're going to adjust that for some forward looking measure of inflation. And, you know, that could be, you pick your measure. It could be, you know, there are all kinds of different things you can pick and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, you know, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
Okay, that was it, man. Oh, we got some music going on, dude. Oh my god, dude. Hold on, I was like, what the? Just play this over deep progressive house music, huh? Let me see, I gotta readjust this. It's alright. Okay. Let's just go ahead and do the... Just give me a sec. Let me, whoa. I wonder, yeah, audio stuff. My mixer and all that got so screwed up. Give me a sec. Okay, so wow, volatility, man. Like clockwork, right? Literally like clockwork, where we dumped and, leading into 30 minutes leading into the event. The event happened and the pump began, and it's every single time. The fifth time now works like a charm. The bots are programmed. If they aren't, then tell me what is making this happen every single time. The dump into the pump. And so you can see Bitcoin. All right. Bitcoin lost 6.5% of its value in seconds. And then it rallied. And now you're up 4.4. At one point, you were up like 6%. So we're talking huge swings in very short periods of time. But hey, nice candle here. And really, I mean, the candle low close from June 30th, you're holding on. You sprung, you're back above it, you're holding above it. But you can't break the pesky 2017 cycle top level yet. Say it's nice that the positive momentum was building again. That was insane volume, highest volume you'd seen since August 26th. So no breakout yet. You really got to get above that level if you're an optimist for Bitcoin. If you're a bull, you're Michael Saylor. You desperately need Bitcoin to get above 19,891. It hasn't done that yet, but it's testing it today a couple times now. Who knows, man? One low, the second low. Always possible that the bearish argument's stronger. But my God, I mean, in time, in history, I've seen like the weaker argument plays out. Something can have a 70% chance of playing out, and there's a 30% chance it doesn't, and that 30% hits all the time. I mean, over a long period of time, 30% of the time, that occurrence happens. So I mean, just saying. But again, let's just go to the date, man. Like on the S&P, like the last rate hike we got. What date was that? What's up, Dan, dude? Alabama landed a top receiver moments ago. Roll Tide.
Much, you're always there to comfort me on the down days and share in the up days. Never anything but the truth. I appreciate you, brother. Cool face.
Thank you, Dan, for the 10 super chat. Much love. Contributing to the community and the stream. Kings, dude. Much love. Very kind words, too. Appreciate you as well. Let's see. Going to July 27th. July 27th, it wasn't much. It was good. I mean, yeah, look, you pumped that day and you ran, right? That was what ensued after. Okay. That was during that 6-week, 2-month bear market rally, right? Let's go back to June 15th. We're just going to see here. June 15th. June 15th. Okay. June 15th, here it was. All right. Yeah, that was the day. And then you gapped down. It was a trap. It was a double trap though, right? This time, because, you'd already lost so much value, so bulls got trapped. I guess if they're playing this like a degen, then they may be sold down here. And then a day went by that day, and then it gapped up. And then that's when the bear market rally started. Okay. So those are the past two. Then before that was May 4th. May 4th was a big trap, I believe. Yeah, May 4th, right? That was this day where, 3% up day. I think it was the biggest day of the year, the biggest green day of the year for the S&P. And then the next day, gap down, trapped, right? And then you continued your descent. And then March 16th was after that. And, March 16th, here it was, right? You gapped up, you broke above a key inflection point, then you back tested it on the next candle and ran up, And you went up like 8% in a couple weeks before collapsing again. So 3 out of the 4 times, good things have happened. One time, bad thing happened, right? The May 4th one, the trap. And that's it. That's like kind of just going and seeing what happened the next day and seeing what happened kind of right after. So here we are, up 0.23%. on the day. And if we go back to the big screen, the quad screen, you can see there's the S&P we just looked at. The DXY is still not given up yet, still not rolling over. I mean, that was kind of a shooting star reversal candle, but not valid really yet, not really caught. There's no fall through yet, but give it time. Gold is really the story where it's back above key levels from history that you desperately need to get above. We'll go back to that on the big screen, on the normal screen, on my screen, so you can see what's attempting to be. Here it is, gold from March and August of 2021, and also July 2022. Remember, you fell below it. You were back testing as resistance for a while, but then an event. Like, it's like an earnings report. My God, dude. You know, I was looking at these altcoins, dude. It's so stupid, right? I mean, some of them up when it's like, really, like, give me a break, man. This is an earnings report for the entire world markets, these things. CPI reports and interest rate hikes. Volatility, insane volatility. It's so difficult, these market conditions. So 4-hour bullish engulfing candle in 1 hour, 39 minutes, unless something changes. But see, as you can see, you were above it without a doubt earlier, and now you're pulling back some. So now you're just getting into that controversy, the zone, man. It's a zone of inflection. There it is, making it gray for you to make it a little easier on the eyes, lighter on the eyes. All right, there you go. Okay, so we're back in the zone, but we're on the bottom side of it. We're not on the top, right? We're not back testing that support. We're still in the midst of it being resistance. And, you know, you can clearly see the downtrend conceptualized on your screen. Beautiful touches. I mean, my God, the correlation of price action is nothing beyond brilliant here on the bottom and the top, right? 5 touches up there. You get an up thrust to test the horizontal line resistance. Okay. But then the back test once and then twice rolling over. So you could run up all the way to 1704 really and still be inside this long-term downtrend. And that's what we have on gold. Okay. Going to Ethereum, just switching it up. Ethereum, 8% swing in price. Largest level of volume, at least on the Coinbase exchange, in a while, man. You haven't seen this much volume on Ethereum on Coinbase since June 15th. So multi-month highs on volume, not going anywhere. 8% swing. You're right around exactly where you were before Jerome Powell, or before even the lead up to the 30-minute lead up, right, to the event. So there you go, man. That's your Ethereum. Still very bearish on this. You can't be bullish at all, right? You've broken the bad action magnet move of the potential bullish bat with a pattern completion zone of $1,000, $1,020. And if you're below 1420, there's not even a controversy. It's only bearish, only auto bearish. You can't be bullish till you break that level. Then we can talk about it. Okay, maybe it could run to 1730 because history tells us that's normally what it does. But when you're below it, only 1223, only 1020 in time. Okay, you're in the bearish control zone still. So Bitcoin's a little bit less. Bitcoin's not as bad in ways because of the 886 or the harmonic, maybe the type 2 return or something like that. Maybe the fact that it's back out of the bearish control zone on the daily again because of today. But in fact, if you're just looking at the daily chat, this isn't what you're looking for. See, this is actually, just hear me out. This is the first bearish backtest you're receiving of 19,891.99, which is the literal 2017 cycle top to the cent. Okay, right there, December 17th, 2017. So once you broke it, you had not successfully back tested that until today. That could change where you just break through it and you moon, okay? But that until that happens, until we break that level, you have to remain bearish here. You can't be bullish until Bitcoin breaks that level with real follow through, with maybe even a back test 19,891 as support, not resistance. Okay, that's the update. I do really appreciate everyone coming out and watching with me this event that we knew was going to be insane. We knew the history of it too, right? The intraday history, the 30-minute dump into the pump, same thing happened. The only concern here, though, is this time we are definitely seeing some sort of diminishing return on the index funds. Okay, remember how? Let me just read it out for you. Okay, let me read it out. March 16th, there's a 25 basis point increase. There was a 2.24%, up day, right? the S&P rallied 2.24% to close, right? May 4th, 50 basis point increase. We had the largest of the rallies. It was the largest rally of the year at the time, 2.99%, pretty much 3%. Okay, going into close or at close. June 15th, a 75 basis point increase, 1.46% up on the day. And then July 27th, 75 basis point increase and 2.62% up on the day. Currently, the S&P, after all that, is actually down right now, barely 0.11%, pretty much flat on the day, but that certainly is different. That is an anomaly we are seeing. Though the price action was the same, where's the follow through? It's not here like it was. We got 35 more minutes, so anything's possible for a pump. And maybe last 30 minutes of trading is the second highest, level. Like that's the, first 30 minutes of trading when the opening bell, highest volume inherently, and then the last 30 minutes of trading of the day is inherently the second largest amount of volume comes in during that 30-minute period. We got 4 minutes till that happens, and I guess I'll stick around till the close so we can see what happens, but we have a difference. We have an anomaly of all the interest rate hikes. It's number 5. And it was not anything but what was expected. 75 basis points a gain. Okay. That's it. If you're enjoying the coverage of this insane event, hit that like button, that bell, that sub. The DXY is rallying again back above 111 like it was a joke. There it is. It was a nothing burger. And you see the S&P selling off again. Bitcoin's not selling off as bad, but again, pulling back. And this is not something that happens. This isn't something that happens. So, yikes. It was certainly an event. I mean, what do you mean a non-event? Ethereum swung 8%. Gold swung 2%. $10 trillion market cap asset. The S&P 500 from its low to its high swung 2.37%. It was definitely an event. And massive volatility. And let's go to the VIX. Speaking of volatility, right? Take a look at it. All it's doing, 26. We talk about a swing, okay? It legit opened and ran up and was at a high. It was up 12%. And then after being up 12%, chat, the VIX went down 15.3%. And then, chat, after that, from being down 15%, it is now up 10%. Wow. Just volatile within volatile. Yo, dog, I hear you like volatility, so we put volatility within volatility, which would be the VXX. The VXX, yeah, I get it. Which is levered, right? Or it's just the futures, volatility, futures. Wow. Does have decay on it, I think. So nearing 1734 again. Let's go to the QQQ, which has Apple and Tesla in it. I have to. It's obligatory, right?
Technology, what is that all about? Is it good or is it whack?
It's whack. This was not what you're looking for. This is not something that ever happens on rate hike days. This should have been, if it repeated history, it should be at $297, $300 by now. It's down on the day, 0.54%. And merely back tested what could be considered a neckline of a not a good looking Head and Shoulders. That's confirmed. You broke it. Now you've successfully bearishly back tested on the volatility and now you've dumped. Right? I mean, that's not what we're looking for. From the highs of the day to now, you're down 2.43%. So, and working on some sort of bearish engulfing candle sorts. But really, I think you got downside. There is a gap fill, at least on the daily, $274. I think that's going to fill in time. And you are in the bearish control zone on the Qs. So, not really what you were looking for. If you wanted the same thing to happen that happened past 4 times. SQQ. You can look. Oh, yeah, man. The SQs, man. Look, dude. Above $46, bullish. Only bullish above $46. Nothing to talk about. And what we discussed yesterday, you have one valley, a second valley that's higher than the first, and then the third valley that's higher than the second. Classic accumulation on this levered ETF or ETN.
186 on the retracement from the 2002 high and retested it. Is it going to the 886 retrace at 116?
Yeah, I think so in time. Yeah, if you're patient, it might take a month or two or more because it grinds, man. Even though it's been mooning the whole year, it's not a crypto pump, right? It takes time. Because remember, you know what that is, right? Like 80% of the DXY is the euro. And the euro hit fresh 20-year lows today while I was live on stream as it just began. And I think you're going to 96 cents on the euro. So you're below parity. The US dollar is worth more than the euro right now. And that might be a new normalcy for us. I could imagine. I think it is. Okay. The leaders in Europe. Yeah, I feel bad if you're in Europe and you're awake and you're able to see this because you probably are awake. But I feel really bad because the leaders are putting the entire continent in massive jeopardy. Like your lifestyles, your cost of living, everything is screwed, and it's deteriorating. And the acceleration of the deterioration you can clearly see happening. Okay, SQQQ. Let's go to the SARC. Hey, what if I own some SARC, man? I own SARC. This is shorting Kathy Woods. Yeah, she's a scam. She's a joke. She is the byproduct of excess liquidity, record levels of excess liquidity in a system. Okay, so once you break $61, bye-bye. Going to 74 and 79. I think we'll see that again. But one does not simply ignore a harmonic this beautiful in a long-term uptrend. Yeah, dude. I gotta make another coffee if you just stick around. Hey, S&P is at the lows, chat. This is definitely something that hasn't happened before. Of the last 4 rate increases, we had just had the 5th. This doesn't happen. So, again, you've got 27 minutes till the stock market closing bell. And you're at the lows. In fact, the lowest lows you've seen since July 18th. Multi-month lows, chat. Well. All right, I'm going to stick it on the screen for a sec. If you just stick around, just bear with me. I got to get some more fuel. Okay, some Irwin Coffee fuel to keep the stream going while we are in Power Hour. Again, less than 30 minutes till the stock market closes. I'll be right back. If you're enjoying the coverage of this, all this, hit that like button, that bell, that sub. Be sure to join the Discord because you would not know, you might not know I was live unless you were in the Discord because we notify you 100% if I'm live, okay?
Quarterly, please. 0.012732110 EDH.
Quarterman, I'll look at that. Thank you for the 17. I'll be right back, though. We're going to look at all. If you ever had a request, I'll be looking at it. Just hang tight as we're watching the markets churn. Thanks.
beyond what my eyes tell me, through and through, your heart and beyond, to who you are, stitching and thread, rugged lines that make your silhouette. Look past colored mirrors, colored glass, intense echoes sing back, lines etched with experience, love, and life lessons.
All right, I'm back. Were you able to make it without me, dude? That was, painful, I know, but geez. It only took, what, 60 seconds maybe? Yeah. All right, can we get an audio check right now? Make sure the levels are normal. I had to do a bunch of stuff on Mixer, so it could be all messed up now. I just need to get confirmation from a mod or something. Man Bear Pig says super painful. Sorry, dude. Jeez, is that bad? Kappa? All right, Brad. Good stuff. 3826 S&P. Gold unable to breach that key level. DXY continuing to rally, and Bitcoin is literally exactly where it was before even the lead up, right? It was two things, the lead up and then the event. Flat. And unfortunately, not above 19,891, which is where you need to be always. Okay, so we had a couple requests, I believe. Maybe one earlier in the stream too. Let me make sure here. Oh, well, it was Post Malone's Dogechain coin or whatever, but we looked at that and it was pumping, dude. It was reacting at an 886. DXY. Let's look at the DXY for Anonymous. Thanks again, dudes. You're out there still listening. He's asking about an 886, which you say monthly or you say weekly. I'll look at the monthly so you can see what I'm talking about. Yes, it's a massive W-shaped structure. Massive W shape. The 88% retrace is 115. 115. And he said you blew past the 786, which is 110.27, and that leads you to believe, yeah, the next fib node's probably gonna be achieved, and you can clearly see the 886 on deck, okay? Highest RSI on the monthly since 2015, 7-year highs. The weekly, it's funny, right? The weekly was showing the bearish divergence, and then the positive momentum started to build. So kind of invalidating your divergence argument almost out the gate. And the RSI, look at that, just getting more of a bot, 73. It's kind of ridiculous, man. Kind of ridiculous. He didn't even say the weekly. He was just talking about the 2002 high. And we looked at it, and yeah, so 115, 886. There you have it. Okay. The next one was the SPX quarterly, the 3-month chart. And we'll look at it, and it's not pretty. Not pretty at all. Here, do you understand? Here's your weekly. Just starting with the weekly for a sec, because we just moved over. Very, very bad. Remember what we had identified on Friday? A massive bearish engulfing candle on all the index funds on the weekly. You're beginning to catch follow through. Not only that bearish engulfing candle, but also the hidden bearish divergence, indubitable, undeniable. You cannot argue. It's there. The negative momentum this week is beginning to build. Imagine if we get follow through here, how bad it's going to get. 200-week moving average is the target, I think, 35.86. A candle or a wick high from August 2020, and fresh lows on the downtrend that you've been in for a while now. I got sirens going on outside. Let's what was it? The quarterly. He requested the quarterly. Let's look at the monthly, then we'll look at the quarterly. Here's your monthly. Not good. 9 days till this closes. And if you close below 37.79, it will be the lowest monthly candle close since January of 2021. Wow. Now the 3-month, the quarterly, which in 9 days, this candle will be closed. And this is not bullish. This is not a bullish candle. It's just not, okay? And remember, look at the RSI divergence. The high, then the highest high. Lower levels while being overbought. You know what that means. And you're sitting just below the bullish control zone, right? You can see 60. You're below 60, you're neutral. But dang, man, how long we were, God. For 2,650 days on the 3-month, the S&P 500 was in or above the bullish control zone. Okay, and then you fell below it. Okay, dang. But then for another 820 days, you were back in or above the bullish control zone. Now we're back below it. Not really looking for it. Let's take a look at the S&P. Top left of your screen at its session lows and dumping. This has not happened before. On the 5th interest rate hike, we are seeing that price action not the same. We are not the same as the previous 4, not today. If the S&P isn't good, it is terrible for Bitcoin and any risk-on asset. Okay, terrible. Still in the midst of power hour, Bitcoin has swung multiple times, 7% from its high today to where it is now. It's down 4.5%. So that was for you, Quarter Man. I hope that helps. Yeah, really, really nasty looking candle. I mean, someone would try to say it's a reversal, but it just to me looks like buyers attempted and they miserably failed. And so they're running for the exits again. And that's it. How about we return to the mean, right? This is a demand line that goes back to 2009, right? It was beautiful. It was look at the piercing line reversal. Remember that? COVID crash, piercing line, beautiful Japanese candlestick reversal. And it played out like the Jesus. And now it might be time to revert to the mean around 31.56 again, if anything. Okay. Here's your 4 hour. A massive, nasty, bearish engulfing candle being worked on here. A gap fill's coming though, right? This seemed like it was gonna occur, right? 37.92 gap fill, and then another one at 36.74. I think that's probably coming. And the divergence that we've been looking for, not really playing out, is it? I'd like to go ahead and say, I mean, I don't really do this, okay, much, but think about, an oscillator. The oscillator fell into the bearish control zone, right? Then tests the top of it to confirm it's in the bearish control zone once, then twice, pretty much, right? I mean, isn't that what it really just did on the 4 hour? That's not bullish. It's terrible. It's so bearish. My God. And then your negative Momo's building again, right? Is it even bullish? Maybe, who knows now, man. The daily is awful. The weekly, the 3-day, the monthly, quarterly, awful. DXY 111.14. Your quad screen. Uh-oh, QQQ really catching some follow through now after that bearish back test of the neckline of the head and shoulders, it seems. Wow, look at this. Highest volume the QQQ has seen since June 15th. Multi-month highs on volume today. Wasn't that like the Fed? No, 24. I don't even remember. Yeah, the 14th, I think. Yeah, the 14th was the another interest rate hike. But yeah, there's nothing here, man. Not really. I wouldn't trust this at all. I think you're going to go retest the lows. And if not, then fill a gap at 274. What will be wrong with that? There's nothing weird about that at all. All right, DXY, highs of this 4-hour candle.
Mitch, my annual patron is about to renew and I cannot wait. I have 5x my brokerage account since I joined. Can we take a look at the potential head and shoulders on cost neckline started on Jan 21, 2022, multiple time frames showing bearish divergence?
We will do that. Thank you so much, Michael Parker, and congratulations on your portfolio, and thank you so much for, you know, testing some of that to something with me involved in that conversation. Thank you, man. I appreciate it a lot. As you tipped, you were interrupted by the NASDAQ futures hitting its lowest level since July 14th. Sorry, but it sounds like if that's the case, you've probably been short the whole year. It's either cash or short. And look at this, chat. This is the NASDAQ futures right now at its session lows, multi-month lows right now as I'm speaking to you. The S&P also, this is the S&P futures, excuse me, is at its lows, multi-month lows, 37.99, just cracked 3,800 for the first time in months. DXY rallying again. Bitcoin's kind of tame. Bitcoin's not dumping with the stock market, if you notice that. I mean, it's pulled back from its highs, but it's not rolling over. It's still above this local support, right? I mean, it's still there. It's not in any sort of trouble like the S&P yet, okay? So I think right now what's kind of cool is we're seeing a little bit of a decoupling between Bitcoin and the stock market. Michael Parker short / cash the whole year. Let's go, dude. Let's go. Right? It was all confirmed in April when Bitcoin confirmed distribution. That was it. That was the end for me. I was done with the market when that happened. I was like, nope, bye-bye. And, had been thinking about it and dreaming about it the whole way up. It's going to happen at some point, man. We're probably going to get a form of confirmation. If we get a form of I'm done, dude. Done with the market. And we got it. And TA respected, where it's only been down since then. Never came back to those levels after that second test. Lagging, what? Yeah, lagging, probably. I agree. I mean, wait till the market closes and it collapses. But I don't know, man. When the selling pressure stops, when the stock market closes, Bitcoin's actually been able to rally some. But and gold, look at your gold, man. All right, let's look at it on the big screen, okay? I'm adding another alert on the NASDAQ 100. Just if we keep dumping, we're going to hear another beep. You're going to hear it. But the gold chart. Sorry, chat. Back to the abyss you go. What has just happened? Can someone tell me what's just happened again on gold? Somebody? Highest volume since August 26th. What's happened on gold, chat? Alexander, you're not off. You're not off base if you're below 1682. It's a bearish breakdown. And now, yes, you're right. Many people in chat right now are saying that. It is a bearish backtest. Multiple bearish backtests. Failure, 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 failure. S&P futures right now at its lows and continuing to fall. And the DXY continues to pump. I could imagine, y'all want to, we could go to the yields and to see them recovering from the volatility. Go to the US 10-year. Not really. Actually not. Very interesting. These things top out eventually.
Sorry this is a super chat, but man, Apple and TSLA have barely started rolling over.
Oh, don't worry.
Just wait.
Yeah, wait. They'll get taken out last, right? They're the least piece. They're, the trash gets taken out first, and then they're normally the last things to fall. The blue chips. Now, I'm not saying Tesla's a blue chip, but Apple is, and normally that's the last thing to go in real bear markets, recessions. The larger market cap assets that have dividends or growth potential or something, right? They go last. So you're just witnessing that. Once they fall, though, bye-bye everything. 3,800 S&P futures. Big one, yes, lagging, not correlating as much right now, but give it time. We can look at those though. Hold on. Did we have another request? I can't remember. Yeah, Michael said let's look at Costco, which all those probably wrecked, right? Oh yeah, it's done, dude. You're done. All right. Look what happened. It's so beautiful too. Got some sort of crab that reversed, and look at this level. Okay, from November of 2021, it started. It was manufactured, and ever since it was manufactured, price action correlated to it until the end of time. Even here, look, you can see March 2022. But then look, the bear market rally that took us to August 18th, we hit that level, and what happened? You reversed, and now you're below the 200 moving average on the 4-hour. You've confirmed, right? Here's the highest side, the buying climax, the crash, and then the rally, the much lower high. There are less market participants that own this asset than they did before. Okay, and now you're kind of confirming it, and you're rolling over. What'd you say though? Neckline started January 21st. January. Neckline. It's just an inflection point, dude. Look, it's like the high from September 2021, September 24, 2021, and then the valley, a back test from. Isn't that cool? Where it created this resistance, sold off, hit that level, regarded as support for the first time ever, then rallied. Right. So that's your target, sure. I think that's where you're probably headed from here. You're going to go test 469, and then if it's over, if we really are in a bear market, much lower to fall. And you can now probably get away with a channel of sorts. Yeah, big old channel here. Stem this out. Something like that you could understand, right? You have a lower low and a lower high now. So you could be running. I mean, I think the next target's 469. Below that, there's nothing, dude. I mean, maybe there is 437, 410, but then 380. That's where the support really starts coming in the 300s. Okay. Look at the daily. Whoops. S&P is still near its lows of the day. DXY is still near its highs of the 20 years. Below the 200-day moving average. You got earnings coming up tomorrow. It says here. I mean, it might be inaccurate. It's been known to do that on TradingView. They've had inaccurate earnings dates, but it says tomorrow will be earnings. So be careful no matter what you're doing, because it could pump then dump, right? Then dump, then pump, or just dump, right? Not going to pump most likely though, because of the market conditions. All right. So, my God, man. I mean, when was the last time you made a lower high? Before the COVID crash? When was the last time you made a lower high? You've made a lower high. You don't want to see that. Costco never makes lower highs unless something bad's happening, and it has. And we know the market is really bad. You look at all the economic data, we're in a lot of trouble. Guess what else? 33.6 on the RSI. So you're not even oversold. So there's room to fall. 469 initial target, but watch out for earnings tomorrow, okay? Oh, thanks for the 500 likes. Jesus chance for that, I guess, right?
Thanks for streaming the Chair Pow speech, Sensei. That opening was epic.
It was crazy, man. All the alerts were going off, every single one. And then, but it made sense, right? We kind of calm down. And then everything went according to plan with the pump. But now the anomaly where everything's dumping after the pump, which before all the other 4 interest rate increases, we only continued to pump until the close. And now we're dumping at session lows, multi-month lows on the index funds. The DXY keeps pumping. Gold unable to break a key. Old support is now being regarded as resistance. Very bad. But one thing that's interesting too, that we're witnessing, is the fact that the yields are not recovering like the DXY is. Remember, eventually these yields will top out. They will crash. But while they're crashing, also the index funds will be crashing too, according to history. So,
Loving the TA dude. Can you look at him KR/US on Binance for downside risk? Was 6K
a lot lower.
peaking 1K
A lot
few
lower.
days ago. What's the TA saying on this baby is RSI as weekly as oversold?
John, dude, remember everyone. It's there. It's for the quality of the stream. Okay. It's like, if you value my analysis, okay, it's $15 worth of analysis, right? I try to put that in, right? If I'm, Costco, I try to put in some. This was a formal request, right? That was he spent $20 to see this, So we went the daily, the weekly. We can go the monthly too. The monthly candle is terrible, right? Look at this. It's not terrible. But it did put in a lower high. And when's the last time on the monthly you've seen a lower high? You haven't. You haven't even really put in an actual lower high ever until now. That's crazy. Costco on the monthlies never put in a lower high, even during the collapse, man. Look, in the monthly, it was just one line down. Was that a lower high? It kind of didn't even make a swing low and just kept going. Right here was the 2000. It was one red candle. Yeah, okay. So we'll just say that these are lower highs. Okay, 2001. That's the last time Costco made lower highs, and guess what? More downside came from that, but it only went to retest the lows from the crash in April 2000. So that is the last time you formally made a lower high on Costco until last month, because you can see the high, the sell off, you can see the lower high, and you can see follow through. Monk ass, Momo shift, the high, the highest high, the lower high. Wow. That's crazy, dude. Just give it time and the pound will be the same as the US dollar. Yeah, Costco at session lows as I'm speaking to you. Lowest lows since yesterday, but really it'll be the lowest lows since July 13th soon. 2 minutes, chat. We are in the local on the 8s. All right, let's go to the S&P 500 because it's the top of the hour, and we're going to look at the S&P at its lows of the day, at its lows of the months. Yeah, John, we'll look at it. Thank you, dude. Okay, we will look. Just give me a sec because it's local on the 8s, top of the hour. It's a Weather Channel thing in the States. Okay, the gap, I believe, filled.
For MKR/US.
Not yet. Some people will like the wick. I like the candle close because people would be like, no, dude, the gap filled at the wick. It's like, how can you say that when traders settled up, right? They settled up at 3,800, right? And then the next day it gapped up to 38.18. So how can you say the wick is part of the close? I think the gap fill is at 37.91. It's nitpicky, but it's just, in my opinion, man, right? This is a nasty candle. Really, really nasty candle. I'll have an alert at the candle close gap fill. Ugly. Closing bell. Less than 2 minutes, chat. So we're running out of the clock. Let's look at the other index funds. Oops, sorry, wrong one. Here's your Dow Jones session lows. It will be the lowest monthly candle close since June 17th. Talking quarterly lows, 3-month lows on the Dow Jones in 45 seconds. And guess what, chat? There certainly is a gap to fill down at that level I just spoke about. This is a gap that is open, right? Traders settled up June 17th at 29,886. Then the next open, 30,069, and you never filled it. So that's still open. That's the target if you're Dow Jones inverse moon boy, earth boy. Right? What is the inverse of moon? Core of earth. Core of earth boy. There it is. Kinder Morgan, let's go. Type in the chat. S&P session lows 37.88, and there it is, chat. Let's get some Jesus chimes because that's our closing bell. A bearish Gartley on Kinder Morgan just happened to be the bearish Gartley's pattern completion zone, June 14th. Just getting a daily close below the 200 simple moving average, close below key levels from history. It's very, very bad here. Energy stocks, chat. All these W's. S&P with that fresh alert going off. Did it happen? Did it occur? We have more Jesus chimes because at close, the S&P 500 filled the gap from July 14th. Oh my God, can we get some Leroy Jenkins too? Beautiful, man. Certainly in the bearish control zone. Lowest RSI officially as of today you have seen since June of 2022. The S&P, June 17th. You have now taken out the lows from September 6th and now lower lows. You're at 33.8. Very bearish. And look at that back test. We fell into the bearish control zone, then confirmed we're bearish. Beautiful, right? And now rolling over from there. Gotta love it, man. Disgusting. What a downtrend. Chewy, what's up, dude? Thanks. The Shimata here. Please tell me more in the general chat. I'd love to hear more what you're talking about. Thank you, dude. Bitcoin's candle close. Wow, music's loud. Why did no one tell me? Why did it go up too? That's so weird. Okay, so you still have some time left. Don't worry about this, but the S&P has 8 minutes until it's closed. Like it closed, but it has 10 minutes after the candle's still open right now. So you're still selling off. You're down 1.71%. That has not happened this year. Of all the interest rate increases, you've always ended up on the day. Today, the absolute inverse. Bitcoin certainly performing better than the all index funds today. Gold's trying to hang in there, but still below that level. Shimata here. Please tell me more. Was it like El Nino, but for something else? Thanks. As the stock market closed, as Bitcoin's 4-hour candle closed, it held 18,893. But it technically engulfed, but yeah. The Shimata ends on the 26th of September. All right. That was a Jewish candle or Jewish calendar, sorry. Hebrew calendar. Gotcha. All right, well, that's unfortunate, for, people who are somehow smoking the opium and being like long. Like, I mean, it sucks for those people, but like for normal people that care about traditional technical analysis, it's been only bearish since March 31st, April 5th area. Only bearish. DXY pumping at its 4-hour highs. Yeah, it's going, man. Okay. Sub nerd herd. Six minutes. We'll just see how low this dips. But the gap fill's there, man. We did it. It was beautiful, dude. But I hate to be the bearer of bad news, but there's another gap. And it's lower. As you can see here. Man, it's like perfect, isn't it? That's like, you can't make that up, dude. Gaps fill. If they fill, there's another one. 36.74. Is it visible in the daily? I think it is. It is. Look, you see it. It's clear as day. It's right there. It's the next one. Whew. During Shemitah, the land is left to lie fallow, and all agricultural activity, including plowing, planting, pruning, and harvesting, is forbidden. Yikes, dude. Sounds like the worst year ever for that to be going on, right? With food shortages, and it's going to get worse. DXY keeps pumping, chat. It 111.35. Your DXY, chat. Here it is. Let me go to the 4 hour. You can see this channel, the Jesus channel. This is the Jesus channel. Wow. It's gorgeous, isn't it? Breaking that heart line. I mean, we got 115, man. 115 is the 88% retrace from that major top from 2000. So too bullish, man. All the time scales that were saying exhaustion was here, didn't matter. The trend's too bullish, man. Gold's still effed right now. Yeah. I mean, it's below the support. It was trying to break it. It was doing it and then couldn't do it. Couldn't hold on. But you notice how gold is acting just like a risk-on asset, just like everything else. Gold just sells off with equities. Gold just sells off with Bitcoin. Ethereum ticker frozen. Oops. I think we're good now. Sorry. I don't know. It sometimes does that. Yeah, weird. Next update. So back to, speaking of Ethereum, we can look at it. You know, just, it was bad. You know, 8% swing on the day, right? From its low to high went up 8.4%. But then from the top, it then sold off and then closed down 6.69%. Impossible to trade that stuff. It's crazy, man. That's psycho casino stuff. So you know where we are. You're in the dead middle. There's nothing to do. It's either 1420 or 1266 or 1223. Nothing else in between. In between's degen gambling areas. Just random pump dump stuff, just like you saw today. You're looking for an inflection point. You got it. It's lower prices, okay? Not here. All right, man. Well, I mean, that's gonna see. Maker. We'll be going to Maker next for John Dude. My English brother. He wanted to tether. I don't normally look at that. I mean, I have another chart with all the data, but it's not to tether. I'm gonna try to find one with the most data. I don't know, man. We just go to mine with all the data, the US dollar one. Because the US dollar one shows us so much stuff, so much more that you need to see. If you're looking at Tether, it's just like, there's nothing there. It's all like all-time lows. But if you look at Maker to the US dollar, you can clearly see we might catch a reaction at 477, but nothing until then. But really, the hard target, in my opinion, below 762 equals $300, $295. This one is in a lot of trouble. Okay, it is. I mean, you had the beautiful bullish deep crab that reacted in right there, but you're now below the pattern completion zone pretty much. Or maybe you're just now hitting it, the 1618. No, it hit it. It hit it. You're exceeding 1618. Could be a type 2 return, man. But dude, when there's nothing, it's never reversed here before, ever. So you would just wait till 483, meaning you need a little bit more downside, 483. You got another 22% downside before anything even makes sense for a reaction. But I'm thinking eventually it's going to see 295, 300. So it's got 50% more downside from here in time. It's terrible, man. It's really, really bad. Okay. The bubble popped. And that's it. Okay. 20% downside minimum, then 50% max downside before anything makes sense. Okay. John Duty there. You understand? It's never reversed here in history. So you would think it probably won't reverse here. So in 20% though, it might do something because it has price actions correlated at that level before. Let's go to the euro. Let's just switch it up so you can see how bad things are. me show you this 4 hour, how beautiful this chart is. I mean, it is gorgeous. It is so pretty, isn't it? All the successful touches on the bottom and top. Look at that 200 moving average rejected, rejected. Oh, it's wonderful. I mean, you're going to 96 cents. That's been the target. 20-year lows right now. And nothing even makes sense till then. Why? Because you look left and you can see it. I gotta go way back, man. Yikes. Should have just gone to the daily. Hold on, let me just do that. Let me show you the data. Okay. This is it. There's nothing. It's never reversed where it is right now. It should only go to 97 to 96 cents. Probably 96. Look at the touches. That's where it's reversed before. So that's the next target on the euro, which isn't much, but my God, we're talking about a currency. Yeah, you got another 1.5% to 1.7% downside from here. And there's no question about it. Sorry if you're European, but at least, hey, it's been a reasonable time for you to watch the stream, right? So we got that going for us. We can go to the Great Britain pound too. I know some of y'all in here watching from there, and that's your currency. Oh my God. Look what happened today. Like, this is a really nice channel. It's been so well respected. As of 2 days ago, 3 days ago, it was testing the demand line. It's broken it. And there's nothing more on this chart. It's the lowest level since 1985. Let me show you. You have to go, because this just doesn't have all the data. You got to go to the US dollar, the Great Britain pound. IDC, right? Look, there's nothing here until 96 cents. And you got to go back again to 1985. Every time you rally at all, it's going to be the highest level on this, or lowest level if you're looking at the Great Britain pound and US dollar since 1985. There's just straight up, straight down. There's no more resistance. No more resistance on the Great Britain pound for another 8%. So it's like if TA is respected and you live in England and you use the Great Britain pound, that means, like, again, TA is respected. It means you've got 8+% downside potential on your buying power. And then think about your currency nosediving 8% while inflation is going parabolic. While energy costs over there, ludicrous increase. So if you can have US dollars, probably a good place to be, not be in the Great Britain pound for your savings, my God. Just convert it, man, or something. I don't know, but to be in this right now, this is a breakaway. This is a breakout, man. Exceeding the highs from March 2020. That goes nothing. And it's due to trash leadership. Your politicians have put you in the situation. So, just saying, man. She already has, Rico. She already has, whatever, right? That was the first thing she did. Let's just go on a shopping spree, a spending spree as soon as I become PM. Okay. Australian dollar to the US dollar. Australian's probably sleeping. Got to be sleeping right now. But in a lot of trouble because falling off a cliff. Let me show you here. This is a cliff. Not kidding. There's nothing here, chat. If you're Australian, it's the same situation. You got to have dollars, man. Like if you're sitting in the Australian dollar, your savings, you're going to lose 4% more, right? And you have inflation and increased cost of goods, everything, right? 4% more downside on the Australian dollar before anything even makes an inkling of sense. And then below that, that's not even really that strong a support. Below that, bye-bye. If you break that, then you have 9.4% downside. It's over, dude. Look what you've done. Look what you did. You kind of broke it past couple days. And now you're at the lowest price since COVID crash, or at least since the recovery, May of 2020. Multi-year lows on the Australian dollar. Get it? Yeah, we can look at the New Zealand dollar. It's probably screwed too. Sure it is. I know it is. I don't even have to look at it to know, but we will for the sake of being nice. Yeah, cliff. It's off the cliff. Yes. You see here how bad it is? I mean, do we even consider this swing low from 2003 as anything? Yeah, I mean, I guess it held, in 2020 and recovered, but still 3.3% downside on your savings. Things like going inverse parabolic, right? It's like something like this, man. I don't know. Right? I'm trying to make sense of it because you can't do a channel, right? It's bad, dude. Real bad. So weak that it can't even go test maybe a scrub supply line. Oh my God. Just buckle up. Yeah, we can go to the Canadian dollar too. Why not? Oh my God, it is crashing. Well, it seems like it, right? Let's see. The thing is, like, it had confirmed a bottom too. That's what's scary, right? It had confirmed a bottom, and it was like, the bottom's in, man. But no, it's not.
Downward risk as we touched $50 months ago and hovering in the 70s. What's the TA say for likely price targets? Thanks for looking, MakerDAO. I have my money in used as pound is wrecked.
Yeah, pound is wrecked. And it's going to get way more wrecked, 8% more wrecked, if it respects the TA, which it's been doing that, right? Currency pairs respect the TA like crazy, man. Traditional market. Let's go to the weekly on the Canadian dollar. As you can see, what's happened. Oh, we got listed on this exchange in 1987. It's below that level as of like today, yesterday. This is the weekly. So you're working on a very real bearish breakdown. Look, the support, the resistance. Below this could be very, very bad, man. Like brutal. Look at the price action below this level. Straight down, up, down, up, down, up. If this is real, from where you are right now, if you're a Canadian watching, it's exactly the same as the pound. You have 8% downside on your money, on your savings. Whatever you have in Canadian dollars, you're going to lose 8% of its purchasing power, and then add inflation on top of that. You're in a lot of trouble. You're not in US dollars. If you have a currency pair, you're in so much trouble. We have some really, really bad things going on with currency pairs for people in the West outside of US citizens. Key technical support's being broken, and there's no reason why they should stop based on who's in charge, who the leaders are. You know who's governing you. This is the reason why it's happening. Terrible. Irving, fake news. Fake news. He said Ethereum's crashing. Fake news. It's down 0.84%. Man, we've been going today, man. Non-stop. Been a good stream though, right? Sucks about some of this stuff happening, but dang, man, you talk about across the markets. This is like across the markets in all caps, right? Today. Well, remember, like if people are like, hey, the dollar's gonna collapse, man. Well, it's gonna be the last thing to fall. I hope you understand that. So if you're getting snooty over there about you think you're exceptional to the US dollar, yours is gonna collapse first. NASDAQ futures at its lows of the months, multi-month lows. Here's the weekly. Why are we not going to the 200-week moving average? Oh, wait, we are. We are going to the 200-week moving average, 11.1. Here at 11.6. There it is, chat. Fresh lows on your futures. Fresh lows. Nothing makes sense till 10-9-11. Straight up, down, up, down, up. Down, up, down, man. You going down, man. Man. A lot of price action today. But we knew that was coming, but dang, dude. Emphasis on the price action. Emphasis on the action. Pretty historic, man. Yeah, bad stuff. Brewing. It's been going, though, for a year. M2. Look up the M2. Oh, man, I can't get my eyes off this NASDAQ futures chart, bro. Down 2.2%. I'm at another alert. Start hearing the beep again. It's just like we're at the lows again, man.
With a pair like post where there is no history, is it okay to invert the chart and use fib extensions?
Might as well just go with the IDC. Yeah, I guess, to get a target for whatever the Great Britain pound would be to the US dollar, right? But, yeah, I guess. I mean, that's what you do on any other chart, right? From the major low to the high, for fib extensions. Yeah. Okay, people have concerns about Bitcoin and crypto. Bitcoin's not really doing anything. It's just selling off some, right? Still above that one low, but I'm telling you where I think Bitcoin is. I think Bitcoin is at its own respective level. Like, I've already showed this yesterday. I think you're right here in that territory. Sorry, I gotta go to the daily to really do this. I think you're at the imminent demise part, right? I think you're at, when I was in London, man, I was live for this. That right there, that bearish engulfing candle, it was the end of Bitcoin. When you fell below that level and you back tested it and engulfed, it was over, dude. You never saw those levels ever again. Okay, I think that's where Bitcoin is right now. Right here, we're on the tail end of the bearish consolidation, and once, and you haven't caught the follow through yet, but it's coming most likely. And I'm saying most likely, use 17,000, but maybe 14K. I mean, in time, dude. All right, so just all I can say is be careful. Like, that was the same thing I was saying back then. Here and here, it's like protect yourself. About to get destroyed. Straight up, straight down, straight down. Today is awful, man. Look at the back test.
Mexican peso to US dollar.
Of course, Aaron. We'll look at the Mexican peso, bro. Yeah, for sure. All right. But we had another request first, though. Let's look at it. And that was Ave Lind coin. It's Everyman. Yeah, we'll look at the VIX for sure. We've looked at it multiple times today. We'll look at it again because it's starting to go. It's been doing things. And just wait. That will end with an insane run, probably to 40 or above.
Let's go SPY 350. Can you look at VIX folded hands?
Thank you for the folded hands. Yes, we will. Thank you, Jeffrey. We're going to get lit in Vegas, man. About a week away. 8 days away or something. Crazy. Yeah, let's take a look at this. This is the request, man. Okay? See, yeah, this one's good. Very bearish. I mean, I get it. It's near like it exceeded an 886. I get that. But look at you just below the 200 moving average. Is there any indication the trend is reversing? No, because look, you made a discernible peak on the daily May 30th, and then you made another discernible peak August 13th, and all it did was be a lower high than the previous high. And before all that, in between was the lowest low of the entire downtrend. And now you're rolling over again. There's no indication that the trend is reversing right now. That was a beautiful bearish fat pattern too. My God, man, you know. If I'd have been here, someone requests Lind back then. It's like, dang, dude, it's like perfect. Look at the 886. It's the Jesus, man. The Jesus. So, I mean, dang, dude, you're just getting kind of limited on. I mean, I think the target's probably $55 from here. Yeah, $55 if you're patient, you get that. Look at where you are. This shows how easy it would be to get there, right? 37, 38 on the RSI on the daily. There's control zone. I got to keep saying that over and over and over, right? S&P 500 futures right now at fresh session lows, fresh multi-month lows. Right now. You look at it. Here it is. Get wrecked. 37.80 and 20 cents. Still 20 more minutes till we close briefly for what, an hour or so, and then we open back up at 5 or 6 your time, I think. So that's your lend. What were you saying though? Downside risk. We touched 15 months ago, hovering in the 70s. What's TA? Target's 55. And after 55 is 46 and then 27. So yeah. Probably not your lowest risk strategic entry, but where you are now, I think there's more downside. Looking left and understanding what trend we're certainly in, right? It is a long stream. It's been live 2 hours and 30 minutes. But it's the price action, man. I can't leave when Bitcoin's about to collapse. All the currency pairs are collapsing in real time. The S&P futures, as every time I keep saying, every sentence that completes, we're at session lows, multi-month lows on the S&P. All the futures, all of them, multi-month lows. Okay. Chicken man, remember what trend we're in? Remember how any sort of bullish pattern you might think you know or identify is going to be not very reliable, and if it does somehow become reliable, it's going to underperform most likely. So you're continuing to dump, chat. Let's go. Put print, man. Here's Bitcoin. 18,888. Man, go to my Instagram way back 2020 when we were on the way up. We saw 18,888 for the first time since 2017. We're in the middle of a historic bull run, and this was little did I know we were going to 65, 69K right at the time. But dang, man, on the way down now. Yikes. Powell hour. Yeah, really, dude. I get you. Okay, let's go to Mexican peso for Aaron. Which I certainly don't look at the Mexican peso much, but I can imagine it's hanging in there, man. I think it's because Americans are flooding into Mexico City, and just kidding. I don't know. It's not doing nearly as bad as the Canadian dollar, the pound, the euro, the Australian dollar. I mean, it's terrible, right? Of course, it's not good. All it does is lose, right? It's like a S coin, but it's an S coin that isn't, collapsing to multi-year lows. It's already done that, right? Did that in COVID crash, but certainly holding up way, way better than everything else that we've looked at, right? So you're at the top of the range, near the top of the range. You are showing accumulation, which is really interesting. Could be 1, 2, 3. Could be classic accumulation here. But if you're talking about a range, it could also be where it's going to reverse too, because that's normally what it does, right? Or just see it range bound. But dang, man, if it isn't doing this, hard to say, right? It could be just like, how are you showing accumulation here? How is this real life? It's not low risk or anything at all, because when you're nearing a resistance after a nice run, but you can clearly see you're uptrending midterm, right? Since at least November 2021. I mean, since the stock market topped out, the Mexican peso has been doing relatively well, above the 200-day moving average. It's been fish, man. Oh my God.
We need you more now than ever. Keep up the great work and dedication. Thanks, Mitch. 0.054204220 ETH.
Thanks, Pierce Fisher. You just became the session top Jesus, man. Killed it, dude. Slayed it. Much love. I really appreciate it. And thank you for the kind words. And hey, man, this is like fun for me. You know, like this is like my passion, you know, is just charts, TA, and events drive the charts. So today has been a very fun day for me. Just being able to witness this, and it's a blessing I get to do it in front of y'all. Where it's, again, like another fresh multi-month low on the stock market futures, all the index funds above, all 4 of them making fresh lows. But yeah, Mexican peso is really good looking right now. And that's it. If you break 5.076, bye-bye. In a good way. Positive way. You might be going to 5.4. So an anomaly in a very bleak situation, man. Higher highs, higher lows. Let's go. All right. So that was a request. Let's go to the VIX for Jeffrey, man. That has been all over the place, right? From its high to its low of the day. 15% swing. But from the bottom to where it is right now, 10% swing, you know. So again, above 26.26, elevated. Hit its highest levels today since June 23rd, multi-month highs. And again, do not ignore the accumulation that is going on. Accumulation on volatility. It eventually will probably end like this. Just saying. And 2018 was similar-ish. 2018. Yeah, I mean, should accumulation for that pop. It really was nothing compared to what we saw the COVID crash. But yeah, I just pay attention to the accumulation. It just keeps making higher lows. And it's been doing it for years. It won't end well. If you're above the 200-day moving average on the VIX, you better be paying attention, man. Everything's bearish on the equities market. I mean, mostly everything. You get it collectively. That's your VIX, Jeffrey, man. Okay. Just fluctuating back between the quad screen and the main screen. That was the last request, though, too. No more requests we have on the docket. And you have to be, I mean, nothing's changed on Bitcoin except it just got worse. It only just got worse because as you might have been trying to articulate an argument for a reversal, no, you just reinforced the bearish bias. That is not something to be ignored. Okay? You can't ignore that. Market participants really, really know now, without a shadow of a doubt, that the key level, the keyest of key levels you could imagine or dream of, is now certainly a resistance. As yesterday, it wasn't really. Now we know 19,650 had been tested as resistance a couple days, but now you just went back up there with a wick and tested the top. And now you're well below it. Now you are, after the back test, you're now down 5% from that test. That's rejection. That's very bad. At least in my opinion, man. Still got like 26 minutes. So your futures closed briefly. And it's not looking good, man. Live 2 hours, 40 minutes. If you're enjoying it, hit that like button, that bell, that sub. Please be sure to join the Discord if you haven't. I'll post that link again. It is pinned. But you join the Discord for multiple reasons. One, because the conversation continues when this live stream inevitably ends. But you also join because YouTube notification system is terrible. Most of the time it will fail you and you will miss live streams like today where, hey, I did not stream at normal stream time. So it is really important you're in the Discord because we 100% of the time notify you when I go live in that. You get pinged. right to your phone. Oh my God, he's live at 3 a.m., 5 a.m., 10 a.m., whenever it is. YouTube won't do that. That's right. Join or be destroyed. Thank you. That's right. Them shorts printing, dude. Honey, no one cares, dude. No one cares about your scam, all right, at all. Hey, look, Honey, the scammer, trying to shill his trash. No one cares, dude. Go back to your Telegram group and cry about it. Oh, I love it, dude. This has been my money printer on shorting it, just being short Moderna since 178, 179 or whatever. Oh God, it's killing. I can't wait till this support breaks and goes to 103. And who knows after that, man. Can't wait, dude. Bubble pop on this trash. These scammers. Talk about biggest scam in human history with the vaccine, gene therapy, right? Not vaccine. It's not a vaccine. They changed the definition to make you have to get it to keep your job and livelihood or to travel or whatever. I love how it's at 37 on the RSI on the daily, bearishly engulfed today. So it's not even close to being oversold yet, and the negative Momo just starting to build. Its conditions are pristine for more downside on this scamdemic. Now I get it. I understand. I call it scamdemic, not because I think the COVID virus is fake. It's a scamdemic because of what these entities did to make almost trillions of dollars. It was like the government gave, hey, we can't do FDA approval stuff the normal way because people need something. The vaccine, they need something. So yeah, it's real bad, man. Big Pharma. Beyond Meat. Oh my God, dude, that thing's already dead though, right? Yeah, you can't. It's already dead, man. It can't be any more dead, can it?
Dollarbind says, hold my beer, $MRNA, take a look.
Dude, fresh all-time lows today. 1590. All we can do since it all-time lows, go from that previous low to high. Low to high. 1272 at 1409 is your next target, your first target. Then 1066, and then 574 after that. You got to believe 574 is probably happening. This is, you know what this chart is, right? This is the West, or at least the free market, as free as it can get now, right, is rejecting fake meat that tastes like meat. No one wants that. No one wants it. This chart tells you that. This should go to zero. I hope it goes to zero. No one wants it. Lowest RSI since December 2021. Who cares? Yes, the COO ate a person's face, bit someone's face. That's what happened. Great look. This thing should go to zero. Yeah. Jeffrey, unfortunately, no. I wish it could, though. Won't you? Look at these S&P futures just hugging the lows. What a scam, dude. Beyond Meat, really, dude. What a freaking scam. Ethereum near its lows of the day. After rallying 8% and then losing 8%. It's crazy, man. Ethereum just sitting at 35 on the daily RSI, man. These are just really bad market conditions. And it's just interesting that Bitcoin, I guess Bitcoin's gonna just have to wait for the circuit breakers, right? Bitcoin just gonna have to wait for the VIX to go nuclear before it really, Michael Saylor, buying Bitcoin or getting a bearish back Tesla, that this dude is gonna get wrecked. Again, he just keeps getting wrecked, keeps taking L's. Just keep buying Bitcoin, man. I mean, great, dude, but He's just buying thinking like it can't go lower or something. And it's sad because the amount of money he initially put into Bitcoin and now how much he's putting in, it's just funny how small the amount is compared to the large sums he put in at much higher levels. It's like somebody clearly is broke, trying to scrape together pennies to buy Bitcoin as it keeps dropping lower. And it's not his first rodeo of losing more money than anyone in the world. He did that in 2000. And the futures keep dropping fresh lows every time I say something, dude. Every time you blink, fresh lows on the futures. 19 minutes till the close. You want to look at something that's crazy? Look no further than COP, ConocoPhillips. I think oil stocks have topped out in ways. At least they're showing the structural developments, you know, the complex wave structures at the end of them. Down 8.7% today. Hasn't really done anything, but this is what happens. This is what it looks like before the end. Before the end, before the markdown. And you could go down really good at $92, $89. You've fallen out of the bullish control zone. It's really neutral, negative Momo building after the bearish divergence. So the bearish divergence is playing out right now. It's just begun. Still just covering the markets. Been live for 2 hours, 45 minutes, okay? If you're not on the Discord, you're getting wrecked, okay? Thanks for those 750 people still tuned in. What a day. Hold on, I got sirens going off. Let me mute it for a sec. Now we're good. We are getting new lows. What? We're at multi-month lows right now. What are you talking about? But yeah, I think we're going to retest the real lows from the lows this summer from June, and we're going lower. Yeah. The summer is over. Part 2 is here. There's a high probability in downtrends, like based on history, that after August is when the real bottom gets put in. Like before August, it's very low probability based on historical data that you see the lowest low of the downtrend before August, okay? So we're past August now, and we haven't seen the bottom yet. So you should understand, based on data, it's probable we see the lowest low of the dump, of the downtrend after August, okay? It's just data. It's just data collected. It's information, man. History repeating itself. September, worst month historically, usually the last half of the month. Yeah, dude. So guess what? We're in the last half of the month. Look at this DXY, man. So strong. Bitcoin, no bids. I don't know why you'd be buying Bitcoin right now if you cared about traditional technical analysis. Now, if you're just dollar cost averaging randomly with a blindfold on, go ahead, dude. You're going to do that wherever the price is. But if you care about TA, technical analysis, what is virtually worshipped here, This is like it'd be the dumbest thing you could ever do. You're staring into a very real, undeniable bearish backtest. Which means if it's real, you go to $17,000 and eventually $14,000 after this. If it's real. Okay. That's it. This is the worst thing that could have probably happened today. Besides just straight up dumping, right? A bearish backtest is even worse, I think, because now everyone knows, all the bots in the world, smart people know, what was once resistance from 2017 is now certainly a resistance again. And look at the follow through after the backtest. You are at yesterday's close of the bearish engulfing candle that is still active, by the way. I'm not sure if I should wait till the futures close in the stream or not, you know, kind of just like letting it roll. Only bearish, chat. Only bearish. We are right here. This is Bitcoin currently. That's where we are, chat. Right, yeah, plenty of like months of consolidation and up and down, and then, you know, finally after the high side, you were checking that 200. Okay. A nice, perfect Jesus back test, bearish and golden candle. This comes next. Most likely, in my opinion, I think that's probably coming next. Especially the way the equities look, too. How you read on the day after you were up 6+% from where you are now. Very telling. After today, and then you might be closing at your... You might very well be closing at your lowest level close since December of 2020. A little bit lower, and that will be real life. We got 3 hours until that is confirmed or denied, right? Because you're not yet. You still aren't lower than the low from September 6th. Not yet. You're still holding that. Just like yesterday, you held that. You only made the second lowest low since 2020. But you still, yesterday, made a lower low than Black Saturday's low. That's crazy. What do y'all think? You think, oh, no big deal, man. A bearish backtest like that, I don't care. Oh, I'm going to be Michael Saylor, dude. I'm just going to buy below key levels. After attempting a rally for 2 months and failing miserably like a loser. What do you think? Do you care about the TA? You care about being obsessed with a Michael Saylor, who is legit, man. 2000. He lost more money than anyone on the planet in the year 2000. He's back. It's almost like the One Ring, dude, right? What was once legend became myth. And what was once forgotten should have never been forgotten, right? I mean, pretty much. Michael Saylor is the One Ring of terrible. How to get right in 2000? Let me just show you his chart. The same chart that exists now, MicroStrategy. Here it is. Here's the man who lost more money than anyone in the world. MicroStrategy. Okay. It's so insane. Look how far I have to scale in. Okay, this asset hit a peak of $3,335. And when it was all, I mean, just at the initial end of the crash, in 77 days, listen to me, 77 days, less than a quarter, the asset lost 95% of its value. $3,150 gone in less than 3 months. There you go. That's why. That's how. Get it? Sauron has returned. He has returned, and he's a scrub of himself. He used to be way stronger. Look at this scrub Sauron now, right? Yeah. Look at the bearish engulfing candle last week, like everything else. Follow through, guess what? Probably going down to 130 again. Probably. In time. Guess what? Hidden bearish divergence on the weekly, very discernible. It's there. It's there. . But dude, Bitcoin's holding, man. Look at your weekly. Oh my God, it's like the worst thing you could ever dream of on the weekly, man. Weekly hidden bearish divergence on Bitcoin, you know, becoming more apparent, or it's just developing now. You can see it. And certainly a 33 RSI below the 200-week moving average that we discussed yesterday for a minute. It has never done this. It has never correlated this bearishly to a 200-week moving average. It has always been the bottom. Always. But not this time. But something that's always happened on Bitcoin is we had a Federal Reserve that was always dovish, right? For the most part. Now they're hyper hawkish, and it's like, okay, the Bitcoin's never existed when quantitative tightening's actually been going on. Interest rates been being raised like this. Yeah, and S&P futures near their lows, and the US dollar near 20-year highs, and many, many other currency pairs to the US dollar near 20-year lows, and they got a lot lower to go. Okay, we got less than 10 minutes. I guess I'm just going to run out the clock on this stream. Maybe I'll just end it when the futures close for an hour or so. And then whatever, we'll call it a day. I probably won't be live for the normal stream time for Power Hour for crypto. But doesn't mean you shouldn't be paying attention, because you know what could happen. Crazy stuff happens in Power Hour. Eric, Anakin Skywalker, dude. Anakin Skywalker and Return of the Clones. That's all I'm going to say. Only real ones will get that. If you don't get that, my God, what are you doing? Learn your memes, dude. That's right, Frank. Exactly. Franco, I mean, that's just like a cute scrub support. It's over. I mean, we've already broken the real supports, dude. You know, this is just a joke, kind of. I mean, it's just there. It's like a local miniature support, you know, manufactured in July, and you're somehow holding on to it by the grace of God. But just think about really what's happened just before it's now here testing it. It's like you tried once, kind of, at the inflection zone, and it's like now you have like confirmation. You're like confirming twice that this zone is resistance, you know? It's bad, man. These are the bad times. Well, bad if you are long, right? It's great times for anyone who cares about traditional technical analysis and respects it, and studies it, and honors it. DXY near its highs. Again, my God, it's just sitting there, man. No one's buying, man. No bids. Only bids DXY. No bids S&P and all other futures. Gold kind of hanging in there, coming back a little bit, but still needs some more if you want to break the ice line from last year. My God, man. Bitcoin's just on the 4 hour sitting right at 40 currently. Once you break 40, bye-bye. Oh, massive markdown. Crazy bad stuff. John, way too far out to know. No clue, dude. Like, I don't, you know, unless I can, like, you know, maybe present an argument with traditional technical analysis, it's normally like no opinion, no comment, you know? Because it's just pure speculation with nothing behind it, you know? I mean, 2024, what happens then? The halvening, based on history, that the years of the halvening preceding the halvening have been great. So maybe based on that, but that's a joke, and that's a weak, tenuous argument. I don't know, right? Look at this DXY, man. 111.35. It just hit its highs of this 4-hour candle. Continuing to inch up a little bit at a time. 134.7, right? And keeps going. Now it's 111.35. I think 23 is going to be the meat and potatoes of the recession that I think we're already in. But, you know, people will gaslight you. Government officials that have a midterm coming up will gaslight you to tell you that we're not in a recession. But for people that don't have any motives, will tell you we are in a recession. Go look at the Harvard Business definition of a recession. It's very simple. 2 consecutive quarters with negative GDP growth. We're about to have a third, man. But they're also they will tell you after a third consecutive quarter that's negative that we are not in a recession. Imagine believing these people. These people do not represent your best interests at all. They're trying to destroy society so they can build back the way they want to. The end game for all these Western compromised politician bureaucrats, destroy society so they can rebuild back and they can usher in a central bank digital currency so they can track and dictate everything in your life. They're also pushing electric so they can control that too. It's very easy to control a vehicle when it's electric, but when it has combustion and uses oil, you can't control that vehicle. We got 3 minutes, chat. Just running out the clock. Looking at the S&P in the top left, DXY in the top right, mooning. Gold trying to hang on, but still below key supports. Just back testing again. Bitcoin certainly back testing those levels as resistance too. It's getting very, very bleak over here on the markets, unfortunately. If you're long, I'm just saying bleak. It's just getting bearish. It just means sellers are in control of the market, and everything is pointing to them staying in control of the market for the time being. Bro, they can control gas prices. That doesn't mean someone can't turn their engine on. With electric, they can literally turn off your car remotely, just like they can your wallet, your savings, anything. All right, 2 minutes, chat. Just gonna go ahead and play the graphic. Look on the 8s. Oh my God. Okay. Back to this is the local on the 8s. Okay. You're staring at the local on the 8s. $4:58 Eastern. If you're enjoying the live stream, the coverage, the extended coverage of the insane market conditions today, market events and price action, hit that like button, that bell, that sub, pump those likes, man. Let's see how many likes we can get, dude. Just for the sake of the competitive spirit of humankind. 745 of y'all. Okay. We got currently 672 likes. We could have 700 likes in seconds if you wanted. Okay. 1 minute till the S&P futures closes temporarily and will be reopened in an hour. Okay. There are the 700 likes. Jesus Shams. We did it, man. Boom, dude. Boom. Just continuing, chat. We got double Jesus Shams.
Kush Blends tip $30. Everyone watching this video, please listen up. Make sure to keep up with Tipping Mitch. He receives significantly less during downturns but still provides amazing analysis. Thank you for all you do, Mitch. May PLFC keep us all from eating the bugs.
Thanks, Kush Blunts. Thanks for the advocacy for that. I mean, hey man, that's completely voluntary. If you want to, that's great. If not, okay. I'll be alright. But thank you, dude. Thanks, man. Yeah, thanks for the likes. You got 725 right now and climbing. Every time you hit the like button, the DXY hits its highs of this 4-hour candle. All right, there it is. We are now closed briefly, temporarily. We'll be back. I mean, the S&P futures will be back live. I think it closes, opens for a minute, then closes again, but it'll be open again for real with a new day on, in an hour from now. In an hour from now. 1888.88 right there, and just testing that 4-hour level from June 30th, the candle low close. No, Michael, I've not. Not at all. Just keeps going, man. Brilliant. Cash is king. I really do think what's just happened on Bitcoin is maybe, quite possibly, the last thing that needed to be done before bye-bye crypto. 17K, 14K. Malik, if you do it, it's stupid. If you care about traditional technical analysis, buying Bitcoin right now is stupid. Even if it went up, it's still really stupid to be buying Bitcoin right now. Not financial advice. I'm just telling you. We're talking about traditional technical analysis, something been studied 100 years that we love here. This whole channel is centralized around. That's the heart and soul of this community. If you care about that, it's pure stupidity to buy Bitcoin right now. It just is. Okay. Well, it's been a wonderful stream. Go easy, do it, man. Go ahead. You can. That is something someone can do. I'm talking about capital preservation. One can go short, or they can just protect themselves and stay cash. I'm protecting people. I'm trying to protect people, right? Guess what? Go to streams. Go to the streams. I'm telling you, go back to June 8th stream with me. Go watch and see what I was saying. I was saying the same things I'm saying now. Go back to when I was in London in April, late April, 22nd through the 24th, 25th, 26th. Go watch those streams and see what I was saying. It's the same thing. We're just we're a different spot. But we're below a different type of inflection point now, after bearishly consolidating for 2+ months. The people that would be like questioning that clearly are new. So I guess I haven't built their trust or something, and they're skeptical. I don't really care. I just said go back to one of those streams when we're back testing these levels and see, saying the same thing I'm saying now before the epic collapses. US dollar tether? It's a good question. Yeah, good one. Uh-oh. US dollar tether is back testing levels. Hold on, this is the daily. Here's the daily. Different wick. This is as bullish as it gets. Look what the US dollar tether dominance has done, chat. It has successfully broken a key inflection point that it failed for a little over a week. Sold off, then rallied and broke it, and is now, as of today, back tested that key inflection point as support and is rallying. Sold out engulfing candle from yesterday and has officially achieved that first target from the wedge breakout. Go back to the 16th, 17th, 18th, and find when I analyzed the US dollar tether dominance that was breaking out. These were the targets. They were set back then. You hit the first one, you're going for the second, and you might outperform. So you might be going to an 886 at 9%. That's it, man. The US dollar, the DXY, is at fresh 4-hour highs again. 111.37.7 cents. Incredible. It's mooning, chat. Mooning. You can avoid eating crickets and the bugs either by sitting cash and waiting for the storm to end or being short. If you own these assets, you will eat the bugs. Yeah. At least the probability is high you will, because nothing is certain. Must reiterate that. High probability of massive downside on Bitcoin. That's it. Only a high probability. Not a certainty. Now look at us now. Look at us now, chat. Right? Can I not just leave the stream? It's like something has to happen. You know, as soon as I'm like, if Bitcoin closed right here, right now on the daily, it would be the lowest daily candle close since December 2020. Right now, do you hear me? That's happening. I just love it, like when you know, people will be protected because the traditional technical analysis tells us to be cash or short. And I love how like a month or 2 or 3 months will go by and like new people will come in and talk trash about me or TA or something. And it's like, it's just like how easily and how soon everyone forgets how TA has been so well respected this entire year, over and over and over again. But you always got to have new psycho losers that'll come in, you know, and they don't know anything. They didn't put their life's work into studying this stuff. They don't care. They're just here to talk crap and be negative. Those are the worst people. Those are the problems with our world. Everyone forgets so fast. And look at this, dude. Chat. Bitcoin is selling off. It's at its lows of the day. God, KNC chat. Remember that time KNC was an anomaly and then it was ruined? Now it's at levels it hadn't seen since July 12th. I'm at an alert below this level. Oh my God. This is such a key support. Like you break this, man. You're getting to the bottom of the range again. Yikes, man. Let's go back to Bitcoin though. 3-hour bearish and golden candle confirmed. I accidentally clicked on the 3-hour, my bad. But only bearish right now, man. Ethereum also screwed. Yeah, Ethereum going to 1266 to 1223. Hidden bearish divergence is playing out. And you got to see how bearish this is. Look at your 4-hour. Failing to break out of the bearish control zone. Rejected, and now you're free falling. You're at 32 on the RSI on the 4-hour. So bearish. Imagine being bullish on this. There's been no argument for a bull for a while. And the target's $1,020 in time. Okay, much lower to go. On Bitcoin too, I think. 17K is your first checkpoint, and then 14K after that. Because, and I'm just saying, like 17K is kind of me just being nice. It's a dead cat bounce. 17,189, 17,1. And why it's like, it has never been tested before. There is a chance if Bitcoin accelerates the selling, that by the time you get there, since it's never been regarded as support before, it may not be a support at all. We know this. We can look at Ethereum the last time the acceleration of selling occurred. Ethereum's dead cat bounce was blasted through like a hot knife through butter. Let me show you. Like that's the only way I do it. I don't tell without showing, right? Like with the price action here. Look, Last time, that 1223, the same dead cat bounce relative on the charts, right? Look what happened last time. You just went through it like it was nothing. And that's what could happen at 17.1.
It's been a pleasure getting your TA, man. Guess nothing to see here in terms of making money for a while.
Unless you're short or have puts or something. I mean, you can... I mean, the energy stocks all completing their harmonics at huge tops. Talking about Bitcoin going to probably 14K in time, but 17K first. Just maybe. It might test it. It might react there. But Ethereum didn't react at its dead cat bounce. It went through it like nothing and went to the next level. $888 or $1,000, whatever, $900. DXY, again, just at its highs of the 4 hour. Crazy, man. All right, well, I think I'm going to get out of here. It would require something insanely bad to happen for me to come back after streaming for 3 hours and 14 minutes today already. Bitcoin on the 4 hour is in the bearish control zone. You've confirmed distribution. You've confirmed an old key level is resistance twice now, pretty much. The next step is collapse. But that's only a probability. It's not a certainty. Never has been, never will be. But based on what we know, we've studied, the probability is high. A collapse is coming on Bitcoin to at least test the lows from Black Saturday, which is 17.6. All right. So good luck. Appreciate everything. Malik, you have no idea what you're talking about. You're just saying something completely asinine, and you're wrong. But okay. You should go watch a Moonboy channel that doesn't care about TA. How about you do that? Till next time, respect the T. Hey.
Then, just like that,
Price gonna dip.